Hello, money magnets and master traders. Critical levels have been lost on the S&P 500. The previous all-time pivot high from October 9th has failed as support. The 20 daily moving average has failed as support. And once again, we had another rejection very close to the 5 daily moving average. After back testing that 681 23.6 fib level, the bears certainly showed follow through today. How did we trade today's market? Well, I wrote in my Discord the first post of the day for SPY. I wrote hard rejection at the end of the day yesterday, close to the 681 level. For bearish follow through, 675.5 and 674 must fail as support to keep the pullback going. To be bullish, 677, 679, and 681 must recapture. Bottoms in above 681. Be ready to react. And as price action traders, we're always looking to follow the price action. We don't argue with it, but what happened? I mentioned we want to go long above 677 or short below 675.5 and 674. This yellow line right here was my 677 level. What did the price action do? There was a rejection and then it broke down 675.5. Definitely was bearish follow through, and I let my Discord members know nice rejection from the 677 level with 675.5 support looking weak. As long as below 674 is in play with 672.5. No calls unless 677 can clear as resistant. That did not happen. We broke down right there. Let me change the color. We broke down 675.5 and the market was nice enough to give us a little bounce. It hit my 674 level and 672.5 level. But from there it gave us a nice little bounce. Not to give us a reversal, but to back test that 675.5 level as a resistance where we found selling pressure. And holy moly donut shop, after we back tested that level, confirming that previous support level was now resistant, they pushed it a lot lower, going all the way down to the 679 level. We did have a nice little bounce at the end of the day. After hitting 669, we consolidated a bit between my 671 and 669 level, and on the 15-minute chart we were able to recapture 671 and even tested it as a support. It gave us a nice little bounce, came just a few cents shy of back testing that 674 level as a resistance, but bulls just could not get the reversal. They couldn't get that V-shaped recovery, and at the end of the day, as you guys can see, we just dropped back to the downside. It broke down 672.5. It broke down 671. But we see where the strong buying pressure was. Decent buying pressure. I wouldn't say strong, but some defense from the bulls defending that 669 level. So today, I want to talk to you guys about, is Uncle bullish or bearish? Well, straight up, I am bearish right now. I was a bit bearish yesterday as well, but definitely bearish today. And what next? Well, if we have more downside, we saw how 669 was being defended by the market makers. There's definitely some buying pressure there, some buy orders there if you check level 2s. But if it fails tomorrow, and I also have a 667 fib level, if those two levels fail tomorrow, we can certainly expect more downside. And the target I'd be watching is the 50 DMA, the 50 daily moving average. That's the orange line right there. And the last time we actually tested the 50 daily moving average was over here. That was back on October 14th. And we had a very nice bounce. And from that bounce, it sent us to new all-time highs. I believe that the bulls are going to get another opportunity where we are going to test that 50 daily moving average. It's around 664.7 as of recording this video. It might slope up to the 665 level, but keep an eye on that moving average. If it gets tested, bulls want to see a bounce from there. So if it gets down to 664 to the 665 level, trust the bounce. If 667, 669, 671, and the 20 daily moving average can recapture. What bulls really want to see, especially in the short term, if we are going to be bullish again, a recapture of the 5 daily moving average would be helpful for their cause as well. Because as you guys know, I love this moving average, but when the SPY is bullish, it spends a majority of its time above that green line, that 5 daily moving average. So it's hard for me to say that I am bullish when SPY is rejecting from that moving average. So it needs to get back above it, and I will only favor a bottom is in if that 681 fib level can recapture. That's the 23.6 fib level. No bottom is in unless that level can recapture. So that's the bull case scenario. But if the selling pressure continues, because we did lose a critical support level today, the previous pivot high from October 9th. As long as SPY is below 674, Uncle Chartist is bear bias, and that technically does put SPY in false breakout mode because that was the previous pivot high. We broke out of that pivot high back on October 24th, which led us to a new all-time high, and today we closed below it. So as long as we're below 674, SPY is in false breakout mode, and as long as it's in that mode, we are bearish. Taking out the 50 daily moving average would be very helpful for the bears. That would definitely be bearish follow through. So tomorrow, the bear case scenario is to break down 669, which they couldn't do today, break down the fib level at 667, and break down that 50 daily moving average. If that happens, we are bearish on SPY. We're already bearish on SPY, but that would be bearish follow through. So I gave you guys the bull case scenario. I gave you guys the bull case scenario and the bear case scenario. It's up to you guys now tomorrow to finish strong and trade it unbiasedly. If you want to take your trading to the next level, definitely consider joining Uncle's extended family on the Discord. Information's in the pinned comment below. Let's move on to QQQ. QQQ is in breakdown mode. As you guys can see, it was riding up this uptrend line. We had multiple tests, 1, 2, 3, 4 tests. The 4th test was November 5th, but today it broke it down, as well as the 20 daily moving average. QQQ is in breakdown mode as long as below 618.7. Losing the 20 daily moving average also did not help the bulls, and we even closed below my 613 fib level. So as long as below 613, I do favor more downside. 611, 609, and 607.3 would be my next target. 607.3 being the next fib level. And if that level fails, I would not be surprised if we drop back below the 600 level. I would not trust a bounce unless lost levels that were lost today, gets recaptured tomorrow. So if the bulls want to show that they have some strength and turn things around, they need to recapture 613, 615, 617, and that critical fib level at 618.6. I'm overall bear biased below 625.7. So if bulls want to put a bottom in or a higher low, I need to see 625.7 recapture. Otherwise, right now, I am bear biased. Tesla, I will admit, I was totally wrong on Tesla. I mentioned we had a cup and handle pattern and it's looking bullish. But today with this sell-off, it was a very nice drop back to the downside. It's not looking very bullish to me, but the bears need to show some follow through and give us some confirmation, because when it comes to the cup and handle pattern, the 50% fib level is very important, because the rule says that when it comes to the handle, it cannot break down the 50% fib level. So we need to watch it tomorrow. It's at 441. I have support at 445, 443, and of course 441. If we break it down, that will be extremely bearish, and the cup and handle pattern is invalidated. So far, we still didn't get an official breakdown below that level. So if bulls want to turn things around, they need to get price back above 448, because that level was lost today. So they'll need some false breakdown setups. Recapturing 448 and 458 would help the bulls out. Otherwise, below 448, retesting that 441 level is possible with 434 below. And if we lose 441 and lose 434, that's extremely bearish, and I would not be surprised if we drop another $20 to $25 to the downside. And no, that is not an exaggeration NVDA continues to look bearish to me. Uncle said a bottom. Uncle said a top is in if they can stay below 203.8, and these last 3 days has truly been a blessing. Today, there was bearish follow through with more fib levels lost, including the 20 daily moving average. So from here, if bulls want to get a bounce going, 190.2, 193, and 194.5 must recapture to put 198.6, 200, and 203.8 in play. If you want a bottom to be in, 203.8 still must recapture. Of course, recapturing those levels below 190.2, 194.5 will get a bounce going, but no bottom is in unless 203.8 is recaptured. That's the bull case. As long as below 190.2, 189, 187, and 184.3 are my next targets. And if those levels are lost, we'll likely drop all the way down to 178 to the 176.7 zone. This M pattern is still playing out. Amazon, what a sell-off for Amazon. I mentioned the 249.5 level. If we're above it, get bullish. If we're below it, get bearish. We were below it and we definitely sold off. Now, check out this green trend line. That was the previous all-time pivot high all the way back in February. Today, that level was tested as a support. That's around 242.5. So if it fails tomorrow, that would be extremely bearish with 238.8 and 233 or lower in play. Don't trust this bounce at 242.5 unless we can recapture some lost levels. 244, 245.5, 248, and 249.5 all must recapture to get a bounce going and trigger longs and send us back up to that all-time high. Maybe set some new all-time high records, but only possible if lost levels get recaptured. We need the false breakdown setup. And once again, if we lose 242.5, that will be very bearish. And that would technically mean Amazon enters false breakout mode. Here is Meta. Beautiful sell-off. I really love Meta. I think I'm starting to love Meta more than I love NVDA. NVDA is great to trade, but Meta is just incredible if you can handle volatility. As of right now, we lost multiple levels. 626.2, 625, 623, and the critical fib level at 621.8 were all lost today. If the bulls want to turn things around and get a relief bounce going, they'll need to clear 620, 621.8, 623, 625, and 626.3. Recapture those levels. Possibly we can get back to 630 or higher for our relief bounce. Still overall bearish though. But if the sell-off continues, it's looking like that's the case still. Those breakdown must hold. I'm bear bias. I'm below 621.8. I would not favor a bounce unless 621.8 or 626.3 can recapture. And if we drop down some more, I do have a support at 618. If that fails, 616, 610, and all the way down to 608.6 would be my targets. There's also a gap around 604-ish. Those levels are possible. It's a very nice drop. It's not an exaggeration. Meta is very volatile, but those will all be possible to hit if those 621.8 and 626.3 fails to recapture. And look at this beautiful sell-off. Look at that. Wow. I'll give you the bull case scenario first because it's looking very bearish. But I'll give you the bull case first. If we are to get a bounce, 500, 502, 504, and 505.5 must recapture. Above 505.5, that's a fib level. I would favor a bigger bounce to at least retest that 20 daily moving average. That could be another $10, $15 pop back to the upside. But as long as below, I have the next support at 497 and 495.8. If those levels fail, 494 and 492.3 are my targets. That was a previous low. We'll see if it holds. That was a previous buy zone. But if it fails, we're likely dropping another $10 to $20 back to the 470s. And Apple, it's just chopping. While we're getting some beautiful bearish price action from the other ticker symbols, Apple is not doing a thing. It's holding steady. The plan's overall still the same. 269.5 is the equilibrium level. Above it, we can get a bounce. And it technically kind of did today, hitting that 273.4-ish pivot high. So if we're above it tomorrow, I need to see 273.4 pivot high taken out to send us to 276 and 277.3 plus. But if we already get some bearishness going, 269.4 must fail as support. And the buy zone, this is a buy zone around 267-ish. 267.6-ish, and then of course 266-ish. If we can break down those levels, I would be bearish on Apple. Otherwise, it's still looking neutral. I'd say neutral territory is 271.7 down to 266. We break down that range, whether to the upside or to the downside, we can get a clearer picture on where Apple wants to go. Otherwise, it's looking neutral. IWM is definitely not looking neutral. It's looking bullish because we had a bounce yesterday, but all that bounce did was hit the 20 daily moving average, and with the context of today's price action, it looked at more than nothing but a back test of a critical resistant level before dropping lower. And we lost multiple levels today, with the last one being 240.8. That was a fib level. If the bears can hold that level as resistant, more downside is possible. 239, 237.5, 236, and 234 would be my targets. I would not trust the bounce unless 240.8, 242, and 243.3 can recapture. If we want to talk about a bottom, multiple levels I need to see recapture. First of all, the 20 daily moving average at 245.6. I also have a fib level at 247 and the 23.6 fib level around 249-ish. A bottom is in above 249. And here is the VIX. Yesterday it was dropping, but it failed to break down that 5 DMA. As you guys know, above the 5 DMA we are bullish, and below the 5 DMA we are bearish. It stayed above it. VIX is bullish. That's a good sign that volatility is here, and we're going to get a lot of trading opportunities, money making opportunities. If there is follow through, bullish follow through for the VIX, the next level I need to see clear is 20.7 to put 22.3, 23.88, and 26 plus in play. I don't want to see the VIX get bearish, but if it does, it needs to get back below the 5 DMA and also break down the buy zone around 17.5. If that level is lost, we're bearish on the VIX again. I'm giving you guys a lot of levels, but before I let you go, I gotta give you guys the DarkPool level. Let me refresh this. So 1.6 billion in premium around that 677.5-ish level. And then there's also 1.8 billion in premium around the 669.94 level. So as long as we're below those levels, or we can break down those levels, we're certainly below 677.5. And when you look at the 15-minute chart, we actually rejected around that area. So we clearly know what the intention was for this whale who put in this order. He was selling. He or she or they were selling. And then here we got 1.8 billion premium around the 669.94 level. So how do we use DarkPool levels? We use them the same way as support and resistant levels. Below it, we are bearish. More downside is possible. But above it, a bounce is possible, but we need to clear more lost levels. Guys, thank you so much for watching Uncle Charter's video. It was truly a blessing day for trading. If you want to take your trading to the next level, join Uncle's extended family on the Discord. Information is in the pinned comment below. Let's finish this week strong. I love y'all. Peace.